Okay. Yeah, so also welcome from my side, and I'm talking similar to yesterday about the overview of global sugar markets in the first part, and then on about the performance of our typical sugarcane farms. Before I start, I want to thank our partners for providing the input. I mean, I'm presenting the results right now, but the major work was done by our colleagues Dilip, Richard, Arodo, team, and Ibrahim on the sugarcane farms, who collected the data, who entered the data in our tool, which is not always so easy to handle. Thanks, guys, for your efforts on that, and yeah, it's fun to work together with you on this. The agenda, I will start with recent developments again in the global sugar market and the world market, and then I will talk about the competitiveness of our typical farms on yields, production costs, and economic performance. I will go over this really quick, as we have already seen this world sugar balance yesterday. Just for those who were not attending yesterday, so we had a decrease in production during the season 1920, and 2 years in a row now was deficit on the global sugar market, and then that's mainly driven by lower output from India and Thailand. As you can also see here on the main sugar producing countries, where you can see that Brazil increased the production, which is not driven by area expansion, but just by a shift from the cane, which is produced for sugar instead of ethanol, that increased from 35% in the 18-19 season to more than 45% in the 19-20 season. The drop in India, in the EU, and Thailand we already discussed yesterday. What else? I took a look at the world largest sugar companies, and that is also, of course, linked to the countries where they are active in. And the biggest European or the most European sugar companies have a decrease in sugar output. There's one exception. It's Nordzucker, who increased the sugar output, but this is not sugar production in Europe. The increase is driven by the acquisition of Mackay Sugar in Australia, and we are happy that Samuel will give an overview about sugar production in Australia today too. And the top 10 companies account of roughly 50% of global sugar production, so it's also quite concentrated market. Analysis that beside the EU companies, also the Thai-based companies like Metropol decreased their output very substantially. The main exporters, again, we had this yesterday, so I'm moving over this a little quicker. Brazil increased the sugar exports substantially, and while on the other hand, Thailand really almost collapsed on exports. There's a decrease expected of 50% compared to the season 17-18 for this season. Yesterday we had the discussion about sugar consumption and the development of that. So I took a closer look to that, and what you can see here is that in most of the countries, the last couple of years, the sugar consumption decreased, while Brazil and the USA are kind of stable, or Brazil even increasing. I guess for South and North America, the overall sweeteners demand will still increase, as this is just showing sugar and not considering the increased use of isoglucose. And if we look that for a more regional perspective, like continent-wise, we can still see that in Asia and Africa, the sugar consumption is increasing. So this is the annual growth rate over the last 10 years. So there's still an increase of 1 to, in the case of Africa, almost 3%, while in Europe, Northern and Central America, South America, it's decreasing. But as I mentioned before, this is probably not the absolute correct picture, as isoglucose, I think, in these countries is increasing. Anyhow, if we look at the short-term development, like the growth rate of the last 5 years, you can see that really decreased. So it's still, in the case of Africa and Asia, still an increasing growth rate or positive growth rate, but it's slowed down substantially compared to the period of the last 10 years. I already had the graph on sugar prices, on global sugar prices yesterday, and what you can see here in the comparison, what I added between white and raw sugar is that the white premium increased since 2020 from roughly $60 per ton to $100 per ton, and that we had a very high prices before the COVID crisis, had a strong drop down in 2020, then in the beginning, but now the prices are recovering. And if you talk about global prices, I think it's also important to consider the exchange rate. So the previous slide was in US dollar, and what I did here is I considered the exchange rate and showed the index of the price development since the beginning of 2018. And if you follow the black line again, which is the raw sugar price in US dollar, and compare that to the green line, which is the same price in Brazilian reais, considering the monthly change of the exchange rates, then you can see that the Brazilian producers are now with prices 40% higher than in the beginning of 2018, while the world market is roughly 10% below that starting period. So the devaluation of currency can help producers to have profits or to stay profitable in the production. It has in my view, this slide shows that this has a huge impact if you compare these two lines here. If I move on to our typical farm data now, here we have the sugarcane farms in our network, and what we can see is that we have a slight yield decrease in Brazil on the Sertogínio farm, and we have a stronger increase on the Indian farm, more than 10% yield decrease, and the same on the Kenyan farm. And we had an above year, at least on the KwaZulu-Natal farm. And I recall a lot of conferences where Richard always talked about droughts, but this year, or the 2019 crop, seems to be an average year, or even in some areas much better than the previous years. If we talk about, we talked about world market prices before, and now I'm looking here what cane prices or sugar prices in the cane farmers receive at their farm gate, and how that changed over time, or compared to the average of 2017 to 2018. And what you can see here in US dollar is a decrease in US dollar of 12%, while you have an increase on the Kenyan farm and Tanzanian farm. And I added but for the Brazilian farms, because if you look at it in Brazilian reais, you have an increase of 2% of the sugar prices. So here again, you can see the impact of the evaluation exchange rates. And what also is clear from this picture is that the African or Indian farms receive prices for the sugar which are almost double as high as the Brazilian producers. And if we look at the total cost and revenues on a per hectare base, we can see that in the Brazilian farms, the profitability in the US dollars decreased again, and the farms are not able to cover opportunity cost. And in the case of the Sertãozinho farm, it's also hard. They are not able to cover the depreciation cost fully. While on the Tanzanian and South African farms, the 2019 season was rather profitable and a nice year compared to the average years, mainly driven by this higher or by this price increase I showed on the slide before. So if we move on and look at the total cost, and again ask ourselves where did the major changes occur on cost. I looked here at direct cost, operating cost, and land cost, and you can see compared to the average of the previous years on the Brazilian farm, the direct cost increased of about 17%, and the land cost have seen a strong increase of 15%. A similar picture in India, where we have also an increase of direct cost of 10% and an increase of land cost of 15%.
Thomas,
yes?
Quickly, would you take a question from Samuel quickly? Or
Sure. Yeah, I was at this slide. And if we zoom into the direct cost, yeah, we can see that the driver of the increase of the direct cost is the increase of insecticides. And I don't know whether this is an annual effect or this is kind of a trend that that insecticides application increase in the Sertãozinho area. And for India, the main driver is the increase in Sugarcane cost. But I'm not sure what really drives that. So the amount of cane stayed stable, just the prices increased substantially. And if we move on to the total cost, here it's shown in US dollar per ton. As we have already seen on the US dollar per hectare, it was very profitable, or sugar production was very profitable in Tanzania and Kenya on the typical farms, while even Brazil, when they are still the cost leader, but even though the profitability on the farms is very low or not given in terms of total cost, and compared to the other producers or cane producers in Africa and India, the production costs are almost in the range of $100 per ton higher. But even though here, at least in the African countries, the profitability is higher, and the main driver for that is market protection, which result in higher inland sugar prices. I tried to estimate the production cost again, like I did yesterday for the beet producers, and here I did it in Brazilian reais because and for the Brazilian farms. Because we have seen before that the exchange rate has a rather huge impact on the production costs and profitability. And then I took the feedstock cost from our farms, from our two farms, which are in the range of 820 to 1,040 Brazilian reais, and added processing cost of roughly 340 Brazilian reais per ton of recoverable sugar, and came up then with this total production cost of 1,200 to 1,400 Brazilian reais, and compared that again with the development of raw sugar, in this case of raw sugar prices. And what you can see is that we had a period here, 2018, 2019, where the production costs were below this market prices, and that was a driver why we had a high ethanol output, while we here have again an increase in the prices, which are now above production costs, or were above production costs in the beginning of 2020. And here would our companies covering their total costs and make it attractive again to do a shift from ethanol to more sugar output, and what we have seen in the market. So to summarize the results is that the COVID-19 crisis brought additional pressure on markets, but the recovery is already seen. There's a strong decrease in production in India and Thailand, breakdown of Thai exports, and it would be interesting to have a deeper look into that and the future perspectives with Thanapon maybe after the conference. I think that would be for next year a nice topic to discuss it next year again. And growth rates in sugar consumption decreased during the last years, and the devaluation of the Brazilian real increased the competitiveness of the Brazilian producers. Regarding our typical farm, I have to summarize that even though Brazil is the international cost leader, the profitability in the sector is very limited, and Indian producers are faced with a strong cost increase due to decreased yields and increasing seed cane and land costs. And the question is whether there's a reaction. So if the farmers move to other crops, and Dilip will give us an insight on that after my presentation. And Brazilian producers are faced with increasing direct costs, especially in insecticides. As mentioned before, the Brazilian exports are getting more profitable again, and we see a shift towards higher sugar output again. Thank you very much for your attention, and I'm looking forward for the discussion. And here, in the end, I also add again for the download, which is also in the chat, and the username and password to download the presentations. Thank you very much.